Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for August 17th, 2021. And we've got a repeat visitor today for the trade of the day analysis. We're talking about Nvidia today. So Nvidia reports earnings on Wednesday, and so we've gotten a lot of questions just in general about Nvidia. What do you do with it? It's trading pretty close to an all-time high. I mean, we're within 5% of an all-time high. The valuations are healthy, to say the least, right? We're trading right around 45 times forward earnings. And so, it really comes down to this potentially is one of those handful of stocks that I think might be one of those never sell type of situations. Now, if you're in a tax deferred account, I think you can trade around the position a little more easily than if you're in a taxable account. So if you've held Nvidia for a while, is it a stock that you want to sell at this level and then try to get back in and be all cute about it? No, I really don't think it is. This is one of those stocks that I think have a pretty bright future. I think it's a stock that you're going to want to hold for a while. If you think about the industries they're in within the semiconductor space, I mean, it's all the growth areas you want to be in, right? It's gaming, cryptocurrency, 5G, automotive, self-driving. I mean, if you've tried to buy a car recently and the dealership basically says, well, we're 3 months out on a new vehicle. Well, these vehicles are actually sitting on a lot somewhere. They're literally waiting for chips to, be added to the car so that they can then deliver it to the end customer. So there is definitely still a supply demand kind of imbalance there with a lot of their end customers and end industries. So it's just, again, it's a company that's going to continue to grow very fast and very quickly. Does it justify a 45 times multiple right now? I think time will tell, but it's not a completely egregious multiple compared to what some other things are trading at. And I think it is one of those stocks that if any stock can justify a high multiple, it's probably a stock like this. And so what I love about a stock like this, though, is that it works really well, as a complement to the triple income wheel strategy, right? So you can hold that stock longer term, and as your portfolio grows, you can add to that position potentially over time, right? So you can add that to that position by selling cash secured puts. Again, if you're in a tax deferred account, you can definitely sell covered calls on it, because this stock's not going to be immune from pullbacks, but it's one of those stocks that you don't want to get too cute with it, because you kind of never know when it's going to sell off and just take off again. So this is one of those potential just buy and hold stocks. It's a Kramer loves to talk about Apple as one of the stocks that you own and not trade. And I would say Nvidia probably fits, kind of into that bucket as well. So I will say that, we've talked a lot just in the last few weeks about interest rates. So I want to show you a quick chart that shows the 10-year Treasury rate versus Nvidia, because I think this is important, because it kind of shows you how this stock kind of has bucked the trend as far as tech stocks go versus the 10-year Treasury, which I think, if anything can throw this market off and certainly affect companies with high multiples like this, it's definitely interest rates. A lot of these big tech companies, so if you look at Apple, if you look at Tesla, if you look at just the ARK Innovation ETF that everyone loves, as far as a kind of volatile tech play, all of those kind of sold off in lockstep on that inverse relationship. As interest rates were rising, they were getting crushed, and so you can kind of see the same dynamic started here with Nvidia. But, it troughed kind of in early March, where you can see that the interest rates didn't peak until kind of mid-April. And so Nvidia had already started trading higher and really hasn't stopped trading higher, right? So it it traded down a little bit and then just got right back into its uptrend before interest rates even spiked. So I think that's a very interesting chart, and should give you a lot of just confidence in a stock like this as we're going and moving forward, because I think the biggest threat to a stock like this to trade down is probably interest rates. But again, I don't think this stock's going to be immune to pullbacks, which is why I think a cash put strategy makes a ton of sense if you're trying to add to the position, or if you don't own Nvidia right now. I think it's a great way to add or start a position in the stock, just on a go forward basis. So let's look at I think what's interesting is if you look at the holdings of the S&P 500 and the NASDAQ 100, NVIDIA is in the top 10 in both. So you can see right here, S&P 500, it's the 9th largest holding. So it's 1.3% of the entire S&P 500. And then if we type in QQQ here, it is the 8th largest holding of the NASDAQ 100. So it's 3.5% of the NASDAQ 100. I think there's an argument to be made that potentially Nvidia could be one of those stocks that is considered for the Dow Jones Industrial Average. I think if you look at IBM might be getting a little long in the tooth for inclusion in the Dow Jones Industrial Average. So they would probably want to replace it with another technology stock, and I would say Nvidia is probably going to be one of the top stocks on the list to potentially be added to the Dow Jones Industrial Average, which would be pretty interesting. But they're already in the top 10 of the S&P 500 and the NASDAQ 100, I think, which is certainly saying something. So let's look at the profile here. So we're going to look at kind of the levels I think are appropriate for this stock on a pullback. Again, I don't necessarily recommend selling it per se, but if you're looking to potentially add to your position going into earnings, I think you've got this nice pop in premium that you can utilize to kind of be patient and wait for a good pullback. Again, this stock is not going to be immune to pullbacks, but it is definitely a stock you want to own longer term. So, why not try to pull some money out of the market, if you will, as you're waiting for the stock to pull back, right? Get paid to set these limit orders on, stocks that you want to add to your position or potentially start a new position in. So the strike zone we're looking at is 149 to 173, which correlates to about 13% margin of safety. So what's driving the margin of safety? So it's a pretty volatile stock, from a just volatility standpoint and risk standpoint. So it's a 4, which is slightly below average. So we've got a 42% or 41% mean implied volatility. It is a very liquid stock though, so and you'll see these options. I mean, because of the split that it had, it just split a couple of months ago, 4-1. There's all kinds of options now on a split adjusted basis, just for the next few months as it's kind of adjusted to that. So you got a ton of different opportunities to take a look at just from a liquidity standpoint. The pullback indicator is 2, which is low. Again, that's because it's pretty much trading at an all-time high within 5%. And then, like I said, it reports earnings on Wednesday. So all of these factors are really driving this number higher. So you could argue that in a normal scenario, maybe this strike zone could be a little conservative. So, we're going to look at maybe some strike zones that are just above this level. But I would say, again, I don't think this stock's going to be immune to pullbacks. But as you saw what happened last, a few months ago when interest rates spiked, this company has certainly, at least in the short term, showed that it really is not as volatile as maybe its mean volatility is suggesting. So let's take a look at sales and EPS, because I always like looking at this with this business, because it's one of those situations where, and again, this company reports its fiscal year ends in January, so this 2020 was actually before the pandemic, and so we really saw a nice jump with the pandemic in both 2021 and 2022. What you like to see with businesses like this that did have a huge jump is that it's not going to be kind of like a one-time jump to where it's going to sell off immediately, or earnings are going to drop off immediately. What you see with a business like this, though, because of, I think, the earnings and growth potential that it's always had, it's actually going to continue to increase their earnings. They're projecting 10 to 15%. I could definitely see them, beating those estimates going forward. But the important thing is it's definitely a company that expects to increase their earnings over the next couple of years. So you're gonna see this earnings number continue to go up, which is again why I think maybe you can justify having a multiple, in this range of, it's about 45 times forward earnings. If you look up here, we're at about 46 times forward earnings. So it's a healthy multiple, but again, I think this dynamic of the industries they play in within the semiconductor space, and the fact that, despite this supply demand dynamic, a lot of these companies, certainly more commoditized products, are expecting pullbacks, in their earnings, whereas Nvidia is still expecting growth in their earnings, even in these out years, despite having a huge pop just recently. And so you can see this quarter over quarter earnings growth and sales growth, which is exactly what you want to see, out of a business like this. And so let's take a quick look at the chart before we get into the cash secured put analysis, because I just want to highlight, this stock, I think, could be starting to consolidate and trade in a trend, kind of how it has in the past. So if we look at, this stock just from a, longer term standpoint, I mean, it was kind of trending higher, but you can see, kind of trading range bound down here, but it did break out above so the 50-day broke above its 200-day around in August of 2019. So it's really been in a very nice uptrend for about 2 years already. And so you've got this nice trend where the 50 days trading above the 200-day. You've got the stock still trading above the 50-day moving average. I mean, you have seen the velocity of the move get pretty large here. I mean, you can see the distance between the 200-day and the 50-day has expanded quite a bit just recently. And so I think that's where you're going to kind of see some of this consolidation. But I will say, you just look at the chart, it has these periods where it consolidates and then it breaks out, consolidates and it breaks out. And so that's kind of what you had here. Consolidated, broke out, started, so broke out here and, just kind of shot up, and then we, consolidated here. And then you can see this green line that I drew in here where, it recently broke out. This is kind of in the 161 range, and then had some good follow through and continued to go higher. So let's scroll out a little bit. And so kind of knowing that's the breakout level of around 161, I think that's probably your worst case scenario in a short-term scenario, on a short-term basis of where the stock could potentially go on a pullback. I don't think it'll probably get there, though, because I really think the stock's consolidating up here, just kind of how it has done in the past, right? So I think we could potentially be trading in this kind of range, where you've got maybe 180 on the low end and kind of up in this 206, 208 range on the upper end. So you can see, it tried to break out again, but it's kind of traded off a little bit. It'll be interesting to see what happens with earnings. We could very well go higher, and again, that's why I'm not suggesting that you sell this stock by any means. But I would say if you're looking to add a stock, especially with a stock trading already at highs, certainly be patient for a pullback, because it's not immune to a pullback as much as I'm being a cheerleader for the stock right now. It's definitely not immune to a pullback, and I think this is a great opportunity to really, sell puts and run the triple income wheel on it, because it's got good liquidity, it's got good premiums that we can sell, and so we'll kind of take a look at that. But again, I think this is going to be the range. So anything in the 180 level or below, I think, is a phenomenal purchase price for kind of the triple income wheel strategy. So let's go ahead and take a look at the cash secured puts. And again, this is what I was talking about earlier. So because it split 4-for-1, there's all these kind of random strike prices that you won't normally see in a stock, and as we get into out months, maybe November, December, you may not see all these different strike levels, but we literally have so many different strikes to choose from, which is not normal with a stock like this. But I'm gonna highlight a few just for our analysis, and again, I won't be able to get all three on this in this window view here, because there's so many different ones to choose from. So I'll just start by looking at these levels here. So again, I'm targeting an average monthly yield of 1% if we can get it. Again, we do have earnings risk. Some of these ones here, again, the strike zone is 173. So all of these are above the strike zone. But if you look at, is certainly some of these lower ones, and this is actually the one I'm going to look at right here, is this 175 that gives us our 1% average monthly yield. So that's what we're looking at for the base perspective, right? And so we are going into earnings. These are not in the strike zone, but I think it makes a lot of sense from a risk reward standpoint. So we've got the 1%, we've got 12.3% margin of safety, but look, the delta of the option is actually almost showing you that this is the 175. Where the stock's at right now, it's a $25 over a 10%, right, 12.5% margin of safety. The options are not projecting a move that big, with the fact that this is a 13 delta option with 32 days left. So that is a really good risk reward compared to some of the ones we're seeing with other stocks. We can still get our 1%. It's only a 13 delta. I think that makes a lot of sense for the base strategy, and I like that level a lot. So that's, again, it's under that 180 level that we just kind of pinpointed in the in the chart, and then I would go potentially up to this 185 for the aggressive play. Again, we're targeting about 2% for the aggressive play. I think that 185 level, again, it's on the lower end of that range that we just talked about. If we're going to consolidate, with this stock, over the next few months, I think that 185 is probably a decent level to look at from an aggressive standpoint, and it does have a delta below 30, which is what we're looking at for the aggressive side. And then we got to scroll down a little bit, just given how many options are available here. And I would say even this 170, again, it's a little bit higher than what we would normally look at for our return parameters, but you can get this 10 delta options here and still get 0.7%. So our minimum's 0.5% for this conservative strategy, but you do have a 15% margin of safety. So it kind of meets all those parameters, and again, that delta of 10 looks pretty nice. So again, the 170 I think is a very conservative level for this stock. Again, this is a stock that I really think is a buy and hold, as much as that flies in the face of kind of what my philosophy of investing is. There are a handful of stocks that I think kind of meet this criteria where You don't need to get too cute with it. Again, if you do own it in a tax deferred account, I think you can certainly sell covered calls against it. If you lose it, you can always buy it right back, or sell a tight covered or cash secured put if you wanted to regain your exposure in it. But if you're sitting on it in a taxable account, you've owned it for a while, I don't think it makes a ton of sense to sell a bunch of covered calls against it. But as you're looking to add to your position, cash secured puts make a ton of sense, right? It gives you some premium. It makes you stay patient, with your levels, and I just think it makes a ton of sense. So this is the play, I think, for Nvidia going into earnings. I wish I had a crystal ball. I don't know what's going to happen, but I would just guess based on with the earnings potential with this business, where the valuation currently is, the fact that it's kind of trading close to an all-time high, I would think it's going to consolidate for a while here. It could trade down a little bit. It's not going to be immune to that going forward, but I just like the risk reward of it going forward. So I think implementing a cash good put strategy makes a ton of sense, especially if you don't have a position. I think it makes a ton of sense to kind of add your first exposure through a cash secured put potentially, and just earn a bunch of income as you're moving along. So that's our trade. Enjoy it, and we'll see you on the next trade.